Hey everyone, welcome back to Talking Success. I've got an interesting one for you today. So if you're watching on YouTube, the chap on the other side of the screen, or if you're listening on Spotify or Apple or anything else, the person's voice that you're going to hear in a second, put a social post out on LinkedIn in January, and I'm going to paraphrase slightly here, but basically said that every purchase he was going to make in 2024 was going to be using crypto. Now that struck me as very interesting because I'm a bit of a crypto nerd, as you guys know. But I think when I really sat down and thought about it, I had so many questions. So I've been following his company for a little while, and I reached out to him and said, listen, would love to have you on the podcast because this is quite a bold statement, and I would really like to unpack it. So everyone, welcome to Aeryn. Aeryn joins us from Xion, and there's a couple of Xions, but this is Xion Global. They're a payments platform that specifically uses crypto rails, and we're going to talk about that in a bit more detail. But Aeryn, lovely to have you on. Thanks so much for joining. I appreciate you're a busy man, spinning lots of plates, and if the news over the last sort of week or so is anything to go by in the world of crypto, where we've seen sort of crypto or Bitcoin ETFs come up, everyone thinking it's going to pump the price up to, $100,000 a coin. And what's happened is actually quite the reverse. I think we're now sitting around about $40,000. And all the other sort of cryptos that sort of but sort of follow suit on the sort of blockchain Bitcoin journey seem to have taken a bit of a nosedive as well. But we'll come into that. I think very importantly, everyone, if you're listening, what we're talking about here is the utility behind crypto as a method to move money. So this is not financial advice. We're not talking about any specific coins here or telling you where to invest. There's none of that here whatsoever. This is talking about the utility behind cryptocurrencies. So, Aeryn, great to have you. I should have asked, I don't know whether you're based in Singapore or you're in South Africa or Timbuktu. Where are you dialing in from?
Yeah, from South Africa, so based in Johannesburg.
Okay, very good. I know you spent some time there in Singapore, or certainly the company's got a presence in Singapore as well, right?
Yeah, so I've spent a little bit of time in Singapore. The company's Singapore and South Africa, so we've got two sides to it. But yeah, a little bit of time in Singapore, but I love the South African weather, so it's hard to beat.
Yeah, absolutely. And you can chew gum on the streets here, right? And that's one of the few things you can't do in Singapore. Anyway, listen, let's not talk about sort of what you can and can't do. I want to know how you are going on your sort of very bold post of everything you buy in 2024 is going to be using crypto. Sure. Is that still the case? Was that kind of a typing one evening and went, I don't know whether that's possible. Or,
I would say it's a bold statement. Look, it's a very bold statement. When you, especially talking to anyone in the traditional world, in the traditional banking world, and you tell them that you're going to be paying for everything in crypto going forward, they're like, well, how are you going to do that? How is it possible even if you have crypto? So for me personally, and as a business, crypto, the way I see crypto is it's evolving. And we can't say that today everyone's going to start spending with crypto. It will take time. There's education that needs to be done. There's a lot of stigmatism in the crypto industry about using crypto either as a form of payment, as an investment vehicle, jumping into stablecoins, all of that. Crypto going forward as a payment method and paying for everything, it really depends on where the integrations lie and what crypto you're using as a form of payment. So let's say the best way forward in terms of crypto payments would first you need the integrations. So you paying for petrol nowadays, you paying for things in Takealots, whether online, in store, those integrations and that sort of availability to spend with card nowadays, obviously that's everywhere. Now, crypto is taking effect slowly but surely, and that's also one of our biggest drives in South Africa is integrating crypto payments into everyday life. So whatever you do today using card or cash, you'd be able to use crypto for. But what crypto you use, well, that really depends on where you are in the market. So there's a lot of different areas to cover when it comes to that.
Before we go into that, again, hundreds of questions for you. the first question is why, right? Why would people, or why should people consider using crypto as a form of payment when there are, as you said, bank cards, or we've got NFC on the phones, you can just Apple Pay or Google Pay or whatever it may be. We've got EFTs, we've got all these different forms of payments, which I appreciate use fiat currency. But why should an individual go, I'm going to move away from fiat and I'm going to go to crypto? What are the benefits?
Sure. So I think you need to look at different jurisdictions and where it's being utilized to really understand the concrete use case and benefit of using, say, stablecoins, for instance. Stablecoins is the way to pay. That's my firm belief, although other users would like to use other different cryptos. But nevertheless, you have first world countries and you have emerging markets, right? So if we talk about first world countries, stablecoins used as a form of payment and moving from Venmo and that sort of thing, I think it's a phase. I think the US are just testing the waters, and so is the EU. They already got really cost-effective ways of paying for everyday items, or all different areas of getting involved in the different capital markets. Now, when you're talking about emerging markets, though, and you're talking about Africa and you're talking about Latin America, you're talking about continents and countries that have, one, inflation. Two, they're looking at the purchasing power that they have with their local currency. So Zimbabwe, a perfect example. There's some other countries as well, and the different currencies being used, where they're constantly being hit with high rates of inflation. They're constantly being hit with their currency devaluing from all their hard-earned money, right? So the one stage of it saying that these emerging markets are going after the dollar or the euro so that they have a stronger currency to use for everyday payments, to use for earning interest and just even just holding their money, right? To have a more stable currency that they can hold. So that's on the one side. So inflation and actually having access to a US dollar digital form of it is an amazing benefit for these emerging markets and financial inclusion. The second side to stablecoins and the benefit of it is you're looking at cross-border payments. When you're looking at cross-border payments, when you're looking at remittance, it's a lot more effective. It's a lot cheaper. It's a lot faster. There's less intermediaries involved. It's between you and the receiver. So for me, especially in emerging market, if I want to pay family or friends that are in another country, well, today using traditional banking rails, it's going to cost you quite a bit, and it's going to take some time to get there. But when it comes to the world of stablecoins, that can be nearly instantaneous with next to no fees involved. And you have the transparency of the full transaction in front of you. It's not just a bank saying, hey, well, I'm taking your funds and I'm paying it out to this intended beneficiary. These are the fees that are incurred on it. And who knows, there may be some delays in between that. So I would say definitely emerging markets for stablecoins, that is one of the biggest areas of adoption. That's where you're really looking at these citizens having a stronger value of their currency for purchasing power, for getting involved in other markets around the world easier in the global markets, because otherwise it's tough. You have to create a bank account, you have to do KYC, you have to do all these different things just to even get going. So stablecoins, there's a lot of benefits to it, but I would say those are the ones that we focus on the most when it comes to emerging markets.
So let's talk about the stablecoin then.
Sure.
Let's talk about sort of where it's pegged. So the ones I'm familiar with is USDT, which is obviously based on the US dollar. Are there other forms of stablecoins in other currencies that are pegged to other currencies, or is everything really linked back to the USD?
No, so there's different ones. So if you look at the major market leaders when it comes to stablecoins, for one, you've got USDT, which is by Tether. They the market dominance. They have 70% share. I think they're on 90 or 95 billion market cap. That was the most recent stat that was released, and that's based off the dollar. Then you've got USDC, also based off the dollar circle. They've got about a $25 billion market cap or so. They come in about second, just under Tether. And then you got other ones like BUSD that's being changed out to FDUSD and so forth. So obviously, yes, from a US dollar perspective, I would see predominantly of the stablecoins are on that, right, and pegged to that. But you
Yeah.
also do have the Euro stablecoins. So I think you have Euro C, if I'm not mistaken, by Circle. You have a lot of different other currencies that are pegged not just on the US dollar, but pegged on the euro, and then it even goes so far as commodities. So you're looking at Tether, for instance. They've got, I think it's XAUT, if I'm not mistaken,
Gold.
and I think that's backed on gold.
Yeah. Yeah. Okay. And then coming back to that point, so your stablecoin is USD dominated, denominated. I'm in Zimbabwe. I've got my farm. I receive money from a relative in South Africa. He wants to, or she wants to send me 100 rand. That gets converted into a stablecoin, into a US based stablecoin, then gets remitted to me in Zim. I then convert that to Zimbabwean dollars and spend that, or how does that work?
Well, so the goal of working in stablecoins is to work in stablecoins. It's not
Right.
to off ramp or on ramp. So
Okay.
yes, on ramp to initially get into the market and get into stablecoins for sure. But if you really want the fully fledged benefits of stablecoins, it's to deal solely in stablecoins. So it's to hold stablecoins, to transact in stablecoins. When you're talking about someone paying another individual, it depends on what the intended use case is. So from a farming perspective, well, in today's world, they'll need the local currency for sure. So if someone's sending them stable coins, yes, at this case, they would have to use the most affordable and the most beneficial off ramping into the local currency, right? Where there's lots of providers to that. But at the end of the day, you then going back into the fiat world, which is taking you right back to the problem that stablecoins are trying to solve, which is the high fees, it's the time for processing, it's the actual availability to get stablecoins. I mean, you could have a mobile phone and you can literally get stablecoins and start transacting immediately. You talk about the banking world, well, you're going to have to create a bank account, and chances are your relatives would also have to create a bank account to receive those payments. So you definitely want to try and stay within that ecosystem for sure to get the full benefits.
I'll come back to sort of the compliance and regulatory side in a bit,
Sure.
but let's just stay on sort of user cases. And I think acceptance, and I don't mean acceptance by individuals of accepting, the idea of cryptocurrency. I mean the idea of being able to walk into a merchant or a shop and going, I'm going to buy a loaf of bread and 5 bananas, and I'm going to pay in crypto. How does someone do that? Okay, because I appreciate certainly in emerging markets that there isn't necessarily the infrastructure in place to accept all different types of payment methods. So how do you do that? Is that a barrier to sort of mass adoption when it comes to acceptance of payment method or the crypto as a payment method?
Yeah, so I would say there's two areas. So you've obviously got the consumer level, so actually are looking to pay with crypto, and then obviously you got the merchant level that 9 times out of 10 they don't even know what crypto is. So for them to actually accept crypto and put it on their balance sheet, well, that's going to take time, and that will take years of education to get to that point. But that is the goal. So yes, I would say the one barrier from a consumer perspective is getting stablecoins. That is one of the most difficult parts of this industry, is actually acquiring stablecoins, like even just using your credit card. So yes, the US, EU for sure, you can easily just use your credit card and get stablecoins through any of the on-ramping services. But when you're talking about South Africa and the likes, well, there's a lot of banks that have actually prevented you from actually purchasing stablecoins with card, and you need to do bank transfers and so forth. So yes, there's a big barrier right now on getting people into crypto, especially stablecoins, to use for purchasing, right? So that's a barrier for sure. And we'll get to solutions after this, but that's the first barrier. The second barrier is merchants are not looking to accept stablecoins yet, especially in emerging markets, right? They want to get to it for sure, those that are very crypto native, but those that aren't, especially big corporates, They want to do as they do now. They want local currency payouts, but they want to allow consumers to pay with crypto, right? So they want that conversion. For instance, with like our integrations in South Africa, for instance, with Xion, that makes it a lot easier to actually pay and for the merchants to receive their settlement as well. How does it work? It's basically everything you used to today. If you use the Scan to Pay app or any of the other apps, you could go to the till, you scan a QR code, you select your payment option, could be card, payment comes up, cool, click pay, done. Payment's done, right? Merchants receive settlement. Same scenario. Get to the till, scan a QR code, select payment method. Oh, okay, I want to pay with crypto. I've probably got a crypto wallet. I've probably got a MetaMask wallet. We're talking about users that have crypto, right? Otherwise, they wouldn't be at the till wanting to pay with crypto. Select your crypto option, the token that you want to pay with, say USDT, click pay, done. Pull payments as it is with normal credit card payments, easy, simple, done. But now the merchants, especially with certain integrations, they're going to be receiving settlements in local currency as they already do. And that's through different exchange partners that we've brought into this to allow our clients to be able to do those conversions for their merchants. Because we're talking about payment service providers predominantly. So yes, I think from an on-ramping side, sure, there's a barrier and that needs to be overcome. There is ways and there's new solutions that are coming out besides just using credit card. There's other different ways that are coming to fruition that we're also working on, but not our sole focus. Our sole focus, at Xion is crypto to crypto. But yes, the merchant side, I would say give it 3 years, if not longer. And then eventually merchants will actually be receiving stable coins as settlement, because then as a business, they can use these stable coins throughout. They can do business purchases, B2B purchases. They can put it on their balance sheet. So that is the goal, and we'll get to that for sure.
Okay, all right. We'll come on some of the other solutions in a minute, certainly on sort of consumer education and perhaps merchant education, but maybe that comes more from sort of the PSPs. But I think if you say, define a stable coin, what's stable about it? And is it 100% stable? I think the answer is quite honestly no, because there has been some fluctuation even in USDT, from what I understand. You're the expert here. So how stable is stable? And what is the risk to consumer and to merchants, to be fair, if there is a bit of volatility in the market? Is it actually the volatility is going to be minute compared to what the forex markets or the fiat markets do, or is it a case of, well, this is just a risk, an associated risk of accepting any form of payment?
Look, I think you have to be very careful which stablecoins you go after. You need to make sure that you're going after stablecoins that have good track records of their reserves. So they're very open on how much they have and collateralized in their reserves for the stablecoins that are being issued. And hopefully it is, over collateralized from a fiat perspective or commodity or whatever it is from that perspective. To say you can't say 100% stable. I think you have different types of stable coins, and you have very market dominant stable coins that have good track records of their reserves. Tether is one of them. USDC is another one, Circle, right? They've got very good track records. They're very good in terms of their audits that go through. Can't remember exactly what basis, but to prove that they actually have it in their reserves. That is the first pillar of trust that you need to have with any sort of stablecoin issuer, is the reserves, right? For sure. First and foremost, we need to make sure that one USDT equals $1, right? And those reserves do exist. When you look at stablecoins that are algorithmic based, so based on algorithms and based on smart contracts, and it gets very technical, but when you look at those sort of stable coins, be skeptic, be very skeptic from a consumer and merchant basis, because those, from where I'm sitting right now, is algorithmic hasn't been concretely proved yet. To be stable over time. There's no longevity yet, besides some of the stable coins, but they don't have as much traction as the fiat backed ones at the end of the day. Yeah. So I think over time, algorithmic will come to fruition on a more mass adoption level that has a bit more stability to it than it does today, besides just the reserves. But at the end of the day, fiat-backed stablecoins, I would say when you're looking at Tether, when you're looking at USDC, those are the two you need to focus on. They're the market-leading stablecoins for a reason. They've held their position very well. And if you look at Tether, USDT, they're like the Bitcoin of stablecoins. And they've also done some recent releases on the actual reserves. There's been a lot of information that's gone through there as well to prove that they have those reserves. And I have a lot of different connections in that area as well that say, hey guys, I've seen Tether, I've seen their reserves, they're there. So that's the thing. You have to be very careful. You can't just look at a stable coin and say, it's a stable coin, it's coming up very fast, they've got a lot of liquidity, so forth, etc. But do they have the reserves? Who is running it? Are they compliant? Do they have certain licensing in place? Different jurisdictions. There's lots of different things you need to look at before considering which one to use. But luckily for us, we use the market dominant ones, and we work closely with any stablecoin issuer to make sure that any payments going in or settlements going out are highly vetted in all different areas, and we've done our due diligence on these issuers for sure.
Good. You mentioned Bitcoin. Now, last year, I'm sure you've seen a couple of the retailers in South Africa put out this big post. Hey, we're now accepting cryptocurrency. Come and pay with Bitcoin. And I've had this conversation, I don't know, 5 or 6 times on this podcast with various different people going, I just don't get that. Why would I go into a retailer and buy a loaf of bread today, where tomorrow, hypothetically, I could go and buy a whole shopping trolley full of items, full of goods for the same amount of Bitcoin? Okay, so I know you guys are focused on stablecoins, and I understand that, and it makes complete sense. Do you feel that there is a market there for people that want to spend in other forms of cryptocurrencies that aren't stablecoins, whether it be Ethereum or it be Bitcoin or it be XRP or Solana or all the other sort of hundreds of thousands of coins that are available? Do you see that ever becoming mass adoption, or do you see those really being more utility-based coins for other purposes?
Yeah, look, I mean, we look at the example with Bitcoin payments being released, especially here in SA, and throughout. So to say that other crypto payment options will come to fruition, yes, they will. But it really is dependent on what network are they running on. So one, I need to be able to walk into the shop. I need to be able to pay and leave. I don't want to sit there and wait for a Bitcoin transaction to go through so that I can leave the till. So you need to make sure that you're using the right network, right? That's where the adoption will also lie, is how fast are the transactions, okay? Mm-hmm. So speed is one thing. Then it's looking at the cost. What is the cost to pay with Bitcoin or to pay with Ethereum? What is the cost to pay on that network? And Bitcoin and Ethereum are high, and they are very expensive to pay with, right? Yeah. And like you said, in a few days or even in a few minutes, who knows? Your loaf of bread, you could have bought 10 loaves now, maybe 20. Maybe you could have bought a bakery. We don't know. But the thing is, when it comes to spending with different crypto assets, it really comes down to which network. And what we focus on as well is, yes, we very pro stablecoins for sure, mainly on the settlement side. Yes, from a payment perspective, sure. Stablecoins have about 50% transaction share just in sub-Saharan Africa when it comes to crypto transactions. So stablecoins are leading the way when it comes to payments. There is no doubt about that. But when it comes to, say, let's not talk Ethereum or Bitcoin. Let's talk Wrapped Matic on Polygon. Let's talk Wrapped AVAX on Avalanche. Let's talk Solana or all the other different EVM or non-EVM based networks. That is cheap, fast, it's efficient, it's a way to also give utility to certain tokens that don't have that everyday utility yet. So when you're looking at the decentralized finance ecosystem, right, DeFi, When you're looking at DeFi, you're looking at guys that are transacting in these layer 2 tokens, these networks that are a lot faster. You're talking about Polygon, you're talking about AVAX, Optimism, all these different networks, where right now they're only trading it, or they're speculating, or they're looking to earn interest, or loaning out and over collateralizing it to get certain loans and so forth, in the DeFi industry. But when you come to that user and you say, hey, look, you live in SA and you've been paying for everything with your fiat cash, and 9 times out of 10, if it's that certain crypto native person, they're cashing out their crypto into fiat the whole time just so they can spend it. So now you can say, well, hey, use your crypto directly and spend it. They will then spend their crypto directly at these stores, and that's where you'll see it. One, it's a utility perspective. For certain tokens, sure, yes, maybe in a year's time, well, you could have bought maybe more for that amount that you paid at that time. But for you, the utility is tenfold, because you can use it to pay for your petrol at that time, and place of payments. The second thing is, say, network and speed and cost. You need to make sure that whichever options you're allowing to the buyers and consumers, it needs to be tokens that are fast, are cheap, and have that utility. So when you look at Bitcoin and Ethereum, will I be spending it for my bread? No, probably not. I'd probably use USDT or USDC, or I would use, maybe I earned, I don't know, rewards from staking Rapmatic, and I use my rewards to then pay for my groceries. Things like that. That's where you see, and that's where we see the adoption really coming in.
Let me ask you then, we've spoken about cross-border payments. We've spoken about we've spoken about payments. We've spoken about remittance. What about on the P2P side? So I lend you money, you lend me money. Is there a use case? Is there a foundational use case for using a stable coin to do that? Or with the launch of PayShap here in South Africa, where most of the banks now, certainly for a small amount, have made that free. Do you actually see there's any sort of merit in that? There's any user cases behind it, or not? Is it not really your sort of market, or you don't feel that sort of stable coins offers too much value in that area?
Yeah, look, I think when it comes to P2P payments, that's also kind of the foundation of crypto as well, and transacting, right?
Yeah.
You don't want any intermediaries involved. You want to be able to pay a friend or pay a freelancer, whoever it is, or loan money to them, or whatever it may be. And you want to do it now. You want to make sure there's literally little to no fees involved. And you can do it across borders immediately, peer to peer. From a stablecoin perspective, I do think there's a lot more leverage on that side. You're looking at a digital currency that can flow basically anywhere, depending if anyone has a wallet to receive it in. So the sort of entry to actually performing a peer-to-peer payment, depending on your crypto status, well, it's a lot easier, right? If you don't have crypto, sure, you need an on-ramp, and that would take time. But we're talking about those that have crypto or would like to get into it. Obviously, it's a lot easier than, say, PayShap, for instance. So I have a very strong belief from personal and from stats and everything that's showing in the industry that stable coins are working better in the transactional environment, in the fintech environment, whether it's peer-to-peer payments, whether it's literally just having stable coins as essentially your own bank account. You don't have to get access from anyone or request access from anyone to move your money. It's your money, and you're not paying a fee to hold your money either. If anything, there's a new project which I actually had a discussion with the other day. And like I said, do your due diligence. But there's a new stablecoin coming into the market. It's called USDM. And a nice example of this is, it's a new idea. I don't know what will happen, but they are doing yield-bearing stablecoins. So the fundamentals and everything on how it works, I haven't gone into depth yet. So this is purely just speculation right now. But imagine having a stable coin in your wallet that isn't staked. You haven't done anything. You've just got it in your wallet and you're earning interest on that. That's one example that stable coins can also bring into the market, where you're literally earning interest from your holdings and you're not paying to hold your fees in there. you're not paying anything. It's just you. It's your bank account. Literally, you are your own bank. So sure, stablecoins, it is leading more towards owning your funds. It's leading more towards less intermediaries needing to move the money from place to place, even if it's peer to peer in the traditional world. Stablecoins for sure. I've got a lot of faith in it, should I say? A lot of personal belief, but also a lot of stats that show.
It's interesting you mentioned the sort of interest on a stable coin, and I think if you look at again emerging markets versus developed markets, certainly in developed markets interest rates are very, very low, and you look at emerging markets where interest rates are very, very high. You can open a time bank account here in South Africa and earn 10%, okay, tomorrow. And I think that there may be a bit of education or a bit of awareness that needs to be done for the consumer to say, okay, well, if you put your hard-earned salary into a stable coin, it's not going to grow. Okay, and what does that mean? So, you're not keeping up with inflation, you're not earning interest on that, but you're saying there are some projects, probably DeFi projects, that are coming on board that are saying actually there may be a way, or there is a way to earn interest on those funds, which I think would be a real value prop, and probably a mind shift for people to go, actually, I can still earn interest, or I may not get the same sort of double-digit growth, but I'm still going to earn interest on the money that I've earned. And I think, certainly in South Africa, where you've got, bank accounts paying, as I said, 8, 9, 10%, that yields quite a lot of money for people, right? If they've got some savings. So I think that's something they need to consider. The other thing, you mentioned this, I don't know whether it was a slip of the tongue or you meant to, but there's obviously a lot of talk about CBDCs, central bank digital currencies. What's your view on those? Again, personal view or the view of the business, that's entirely up to you. It's your business. You can say what you want. And do you think that will eradicate some of the challenges that businesses like yours face in terms of consumer confidence if something's backed by the central bank? I think it's going to be a long time until there's cross-border payments, because it means, getting, certainly in Africa, 56 countries together to agree how they're going to do something when it comes to cross-border payments, which, we might be having this conversation in 50 years' time. But, do you feel a CBDC has value? Do you think it will come into effect? Or do you think there's just a lot of people sort of testing the waters and going, is there value in this?
Look, CBDCs, from what we've seen, it hasn't really taken effect just yet. There's been a lot of different jurisdictions where CBDCs have been implemented by, all different central banks. We work with a company called Gesek and Deverance, G&D. They're like a powerhouse when it comes to central banks, fintech solutions. They're quite a big entity, and they also do CBDC solutions. So we got a bit of insights in there as well. From what I can see, is you got two perspectives. You've got one where you're looking at crypto native users, right, that are looking at CBDCs and saying no. They are just blatantly saying no. This is giving more control back to the governments, and it's contradicting what crypto was created for, and decentralization ethos around it, right? So you've got that perspective that there are a lot of crypto native users that are completely against it. Then you've got other traditional users that aren't crypto native that look at CBDCs and say, okay, well, yes, this probably would instill more trust into me because the government is saying that it's obviously good to use, because everyone nowadays looks and says, well, if the bank says it's good, then it must be good. But that's not the case, as we've seen with, a lot of different, things that happen in the fiat world, should I say, the last few years. Yeah. CBDCs, will they take effect? My perspective, I don't think so. I think what will take effect is deposit tokens. Deposit tokens are a new form of CBDC, but they're not owned by a central bank. They're owned by commercial banks. And commercial banks can have their own deposit tokens with their own reserves that obviously would do reconciliation and reporting to the central banks, of course, and the other ties to that as well with the central banks, commercial banks. But commercial banks have their own deposit tokens that can be interchanged between different commercial banks, right? And being able to basically connect all the different commercial banks together with either one sole deposit token that runs throughout, or a deposit token per commercial bank, which is more sought after. I see deposit tokens taking effect. And the reason being on the deposit token perspective is I see the users and consumers being able to tap into the market a lot easier when it comes rather than into the CBDC and regulation around it. CBDCs take time. There's lots of regulation. There's lots of compliance. We're talking about a central bank that now needs to issue a new currency and mint it and so forth. When you talk about deposit tokens, think e-bucks, think ABSA rewards tokens. It's the exact same concept, but now it's run on blockchain or private networks, right, that the commercial bank owns. So regulation, well, there's not much around it. It's the exact same model. You're literally taking a deposit token that could be one deposit token equals R1, or one deposit token equals one stable coin, depending on the bank's appetite and whether they want to hold reserves in stable coins or local currency. That's obviously depending on the commercial bank. But deposit tokens for sure. CBDCs, I'm not so sure about.
So we've got a couple of minutes left, and I think we've left the most exciting thing until the end. And it was your fault because you brought it up. You mentioned central banks, you mentioned sort of compliance, and you mentioned sort of regulatory controls, right? So this wouldn't be a fintech podcast if we didn't talk about, the SARB, we didn't speak about SARS and what have you. When it comes to payments and when it comes to accepting different forms, especially when we're looking at USDT, stablecoin, US based. How does that work from a SARS and a SARB perspective? Because they obviously want to get view on what is coming in the country, what's going out the country. There's lots of very tight exchange controls, not just here in South Africa, but across many countries on the continent and beyond. To navigate those, and I'm being very careful on the words I use here, to navigate those, what are some of the challenges you think the industry faces, and how do you think they can be overcome?
Sure. So you're talking about the crypto industry, right? The crypto industry, if anyone looks at it from first glance, let's be honest, they think scam, right? Because of all the things that have happened. So there's a very bad taste in a lot of people's mouths that don't know crypto, right? Especially on the regulated side of things. So there's different steps that a lot of companies need to overcome in order to be able to instill trust into consumers, to actually use crypto as payments and instill trust into merchants to receive it as settlement, right? And put it on their balance sheets. The first and foremost is AML, right? KYT. That is one of the first things that any sort of even crypto payment providers or anyone dealing with crypto needs to look at. And obviously our company Xion also has to look at as well. Yep. So KYT, know your transactions. What is that? KYT basically allows, say, anyone that's using it to be able to scan the wallet address, which is basically like your bank account number in the crypto world, to be able to take that wallet address and look over all different blockchain networks for either a specific token or tokens or stable coins and see, okay, where have these funds come from? Have they come from illicit trading activity? Have they come from decentralized exchanges? Have they come from centralized exchanges? Have they come from sanctioned jurisdictions? You name it, the list goes on. So being able to, one, prevent people from using any sort of those funds within an ecosystem, like a payments ecosystem, that is first and foremost. You need to be able to flag and basically restrict those users from being able to transact in the crypto world, right? So the first level is KYT AML. Let's get that out the door. Then the second part to it is saying, okay, well, you need to look at KYC and KYB as well, depending on how your company operates. So for instance, you could look and saying, okay, well, you could onboard a PSP provider, you do KYB, you do your DD, you do your due diligence on them, so forth, merchant agreements, everything. And then based on their appetite, they need to then obviously implement, say, KYC, for instance. For their consumers that are looking to pay as well, because depending on the business and nature of business, they need to implement KYC for these users to actually transact with them. So you got the KYT, you got the KYC, KYB for certain businesses. Then it goes into say, okay, well, now you need to make sure that the reporting is there as well. So reporting, reconciliation, data attached to the transactions that can be brokered either to banks to give to the central bank or the different regulators. You need to have that in place so that you can match what transactions are for which person, which users. Because at the end of the day, you need to know that Bob spent 100 USDT at Pick and Pay, and he was either KYC'd or his funds came from XYZ. So at least you know who's transacting. The next sort of step to it is licensing. You need licensing. So you need to have, especially within South Africa, you obviously have to have a license now in order to transact in crypto and process payments. Whether you're an exchange, whether you're a crypto payments provider, you need to have licensing in place so that the regulators look and say, look, they're doing everything by the books. They're reporting, they've done KYC, they're doing AML checks frequently, pre-post payments, so forth. Check, cool, done. Perfect. So licensing's there, AML's there, KYT, KYC, all of that's there. And then you also have to look at an extra extent is to say, if you're doing cross-border payments, well, you have to identify the senders and the receivers. So you will have to have those extra procedures in place if you want to send funds, abroad. And cross-border payments, that will take time, definitely, especially with the regulators.
Yeah, and listen, I think the lens is on South Africa at the moment with the grey list thing. I heard, I think it was this morning actually, that there's still sort of 5 sort of boxes they still need to check off from the 17 that were already there. So at least we're making some progress. But certainly the AML and the compliance side is very, very important. Not just for the country to sort of safeguard itself, but also for consumers as well. That consumers know that this is a legitimate way of paying or accepting a payment or funds or whatever it may be. Okay, so I'm just going to give you one bit of advice, if I may.
Sure.
Don't drive to Durban and don't drive to the Northwest because the toll roads don't accept debit cards, only accept physical credit cards. And I think the chances of them accepting crypto is going to be pretty slim. I've got to be honest. So I got there a couple of weeks ago. I had nothing. I didn't even have a card on me. And after pleading with a guy for about 4 or 5 minutes, he let me through. But
really?
Yeah, so if you're driving, don't go to the Northwest and don't go down to Durban because you won't get through on this whole road. So maybe that's Sasol's the first. Is it Sasol? I can't remember who the road agency is, but Sanaf. Maybe they're the first customer that you guys should approach and go, listen, you need to accept crypto payments, right? So people can get through the bloody barriers that they stick up. But
I'll send you some crypto for your tolls then by the time we integrate.
yeah, fantastic. Listen, this has been super insightful. I think it's opened my mind about the real sort of user case and asset value behind a stable coin, why someone would choose to use that as a form of payment, and it's a more not really sensible, it's a more understandable way of using crypto than, as we said, using one of the big 4 or 5 crypto coins that are out there. I think if people want to sort of speculate and hope that Bitcoin's going to go to $100,000 or XRP is going to go to $1,000 a coin, then go for it. But you could lose everything. With the stable coin, it is more stable. There's nothing in the world that is guaranteed. So as we said, make sure you do your due diligence. Make sure you understand what you're doing and what you're getting yourself into. Do read the fine print. Do your research online. Speak to people who are in the industry, have an understanding of the industry, have used this as a form of payments. People like the Fintech Association of South Africa, and there's the Kenyan Fintech Association, and there's the Nigerian Fintech Association, and the African Fintech Network. All of these associations are formed to help people understand not just the industry, but actually the inner workings and some of the compliance and regulatory angles there. So please do your research. It's really, really important. Have you got any sort of last thoughts or sort of words of wisdom you might want to share with our viewers and listeners?
Sure. Look, I'm saying if you are not in the crypto industry and you're looking to enter it, it's as you mentioned, stablecoins is the best way because it's not volatile, and then you can really play around to see where you want to really tap into whichever markets it may be. So definitely, I think anyone that's not in crypto and you want to enter the crypto, ecosystem, get into stablecoins, USDT, USDC. Those are good bets, not financial advice, but those are good bets to take when you're entering into the crypto market and exiting. So stablecoins for sure. There's a lot of things to come from it, and let's see how payments evolve in South Africa for crypto payments. That's one big exciting thing to see. So hopefully I'll see some people paying for their petrol with USDT very soon.
One last question, and I promise I'm going to let you go. How would you suggest someone who is completely new to the world of crypto, likes what you're saying, and goes, actually, it might be worth holding, $100 or something in a stable coin. How would you say someone maybe in South Africa goes about doing that? What is the best way?
Best way, I would say you really want to own your funds, first of all. So you need a wallet. And the first place to go, it's also through our partners, is MetaMask. That is the number one wallet that you should get for yourself, for sure. When you want to look at getting funds like stablecoins into your wallet, there's different routes, but I would probably recommend that you either go to Valor or you can go to Luno if you want. If you're talking about an exchange where you can actually use your card or bank transfer to actually acquire this crypto, and then you can actually put it in your MetaMask. So I would say get a crypto wallet. MetaMask is your option. You want stable coins, look at Valor, look at Luno, or if you want other providers, there's another provider called Mount Pelerin. They're amazing, good rates. Yeah, they're one of our partners as well. So yeah, get a wallet. MetaMask is your way forward. It's the best way, because then you can tap into the bigger picture of crypto and not just an exchange account. So that would be my recommendation.
That's really good advice. Thank you. But as we've said right at the beginning, this is not financial advice. We're just giving you some tips on if you wanted to get into the world of crypto. Again, we're not sort of talking about any coins. We're not telling you that something's going to go to the shoot to the moon or crash to the whatever. Please just make sure that you understand what you're getting into in the world of crypto. Taking stable coins out, it's a little bit like it can be a little bit like going to a casino. If you go there with what you're prepared to lose, and then you're okay, don't put your life savings into any form of coins. That's my advice to you. Not financial advice, my personal advice. Thank you so much. I've thoroughly enjoyed this. I've got loads of questions, but I would love to get you on in December, and I'd love to find out actually how your journey of only using crypto as a form of payment has gone for a year, and what obstacles, other than going through the toll roads in South Africa, that you may have come up against. But I think there may be a few that we've not even sort of dreamt of. I can think of one now, which is if you're on flying from Joburg to Cape Town and you want to get a bag of chips on SAF Air, they don't even take debit cards. So how are you going to pay with crypto? I have no idea, but that looks like a you problem.
Yeah, let's see. I'll show you end of year. I'll show you my transaction history from everywhere I've spent crypto at, and then we can chat.
I genuinely look forward to that. I'm going to put that in the diary now. So listen, again, thanks so much. If people want to look you up and look business up, best place, LinkedIn, are you guys most active there, or X? Or
Yeah, I would say LinkedIn and Twitter most active. So either you can find myself, Aeryn Quarmby, on LinkedIn, or Xion Global. Same on Twitter, but otherwise, LinkedIn's probably the best place to reach us.
Awesome. We'll put all the links in the description below. So we'll also put some links to some of the partners that we've discussed today as well, MetaMask and some of the others. So thanks everyone for joining, and we'll see you next time.